Hello and welcome to Nick and Lynne's summary of
2015.
the year that was.
The year that was.
So Nick, how would you best describe the market? I mean, I know I'm very largely on the property side and you're probably a little bit more on the share market and other things, but yeah, what do you think of the year?
Looking at all the numbers, it's been a very interesting and contrasting year, and one of the main things that it has affected, I suppose, the performance of markets and alternative investments has been the commodity markets, which surprisingly has been a lot worse than most commentators had made. And I think that's been reflected in the performance of resources, energy, and even countries that largely depend on it.
No one really saw it being quite as dramatic a change as it was. Did you think there was a bit of telltale signs in the lead-up?
I think it's always hard, and you don't expect things to be as bad or as good
or as dramatic,
or as dramatic as they turn out. But I think how fast and the numbers turned around against the commodity producers was
BHPs
quite, yes,
and
the Rios, the
yes.
WPLs. So that was, I think, the biggest surprise, and that has affected, as I said, the performance of the resource companies, energy companies, and countries that relied a lot on those performances, like Canada and Brazil.
So where's the good news coming out of the share market at the moment?
Well, if you break up the Australian share market, you'll see that the performance has been sort of two-sided, one with the energy and resource stocks being quite negative, negative 30% type of returns, and yet on the other side, the telecommunications, the utilities, and the healthcare sector has been incredibly strong, posting around 14-15% return.
And is the medical, is that sort of research, or is that
combines a whole range, but it goes from the big CSLs of this world that do plasma to even Blackmore's that sells vitamins to and
that was a big
drugs.
Yeah.
That was the big one, yeah.
Very good.
So
very good.
It's a whole range, but it is probably a newer sector compared to the more traditional investments in Australia.
It's sort of a little bit like the property market too, because where we're seeing the real growth areas is where a suburb's gone through a dynamic change, or where the amenity has outshone other areas. And like you're saying, it's in the investment market, like what's important to people today. It's the healthcare, it is the telecommunications and
yes.
these sorts of things, isn't it?
Yes, yes. And you can see that happening in other countries too, where if you go to America, even though the economy has been quite strong, their performance has been on par because the resource sector has been affected, but it's not as big as the Australian. But if you go to Canada and Brazil, they have had large falls because of those prices. Whereas, say, Japan, some of the industrial countries like Germany, France, surprisingly have been quite good.
And what about other areas? I mean, last year the bond market had been a real surprise. Where's that sitting today?
I think everybody tries to work out the bond market, and I was looking at the performance figures, and they're totally unexciting at average of about 2.5%. So nothing to get too excited. And I mean, there's probably a bit more variation within the sectors, but there's the probability of high interest rates, and we've seen that in America, which tends to offset any gains from interest rates going, which, as we know in Australia, have fallen a couple of times this year.
And we've seen some great growth in our financial planning arm, particularly in self-managed super.
Yes.
What's your view around that moving forward, Nick?
Well, I saw the latest statistics, and certainly more people are getting involved in self-managed super funds. They're younger, and it's interesting, the diversification of assets is becoming a little bit more broader, so people are taking advantage of self-managed super funds, but it's certainly a growing sector. And we've seen some very interesting situations, people coming to us for a much or
broader view
of the world.
Yeah, I think that's the thing that we're focusing on more than anything now is with our clients trying to get that sort of 360-degree view. You know, it's not just your own home, it's not just the debt on your home, it's not just the need to accumulate, whether it's property or shares, it's not just the need to focus on your retirement, it's also transition to retirement and debt reduction. There's a lot to take into consideration when you really are on the true road to retiring well.
Yeah, freedom.
Yeah, that's it.
And independence.
Definitely.
Yeah.
So what do you think the hotspots for 2016 are,
Crystal
other
ball,
than property,
quick.
hopefully?
Well, property had a good year, certainly led by Melbourne and Sydney, with returns of 11 and 12%. It's likely that it's going to continue in 2016. That's the view. Maybe a little bit more subdued, but it's interesting comparing that to other asset classes. The markets are finding it quite challenging, but I suppose if you're investing for the long term, you have to probably take some bets and take a view.
I think one of the things that we find an ongoing challenge is obviously to educate our clients that it is not a short-term view, it is a longer-term view. And I know that there's many days that I'm really pleased I'm in the investor market, not the home buyers market. Interestingly enough, one of our biggest growths in property at the moment, probably 1 in 5 sales, is our current client base thinking about, well, where am I going to downsize? And with medium apartment prices hitting sort of around the 600 mark, a lot of people are coming to us now saying, Lynne, can you help us buy an investment property today that we can actually move into in our downsized days? So
it's the whole market's changing, but when you put it all together, you get some very interesting outcomes.
What about the Australian dollar? I mean, it's probably where we need to be for our
crystal
trade,
ball's
but what
overtime.
do you think about the Australian
The general
dollar?
view is that it's going to fall further, and I suspect if interest rates in America go up as they are predicting, and our interest rates stay on par or just go up marginally, I think the dollar will fall in value. Unless we start selling more stuff to the Chinese or whoever's left.
Yeah, let's talk about the Chinese for a moment. As you know, we only sell pretty much to Australian investors. We've never really engaged in the Asian market, but certainly the home buyers have taken a bit of a hit they've gone from people, Asian people pulling up in limousines, knocking on their front door, offering them money for their home, to now sort of we've seen a bit of a retreat in that area of the market. What do you sort of see for 2016 in that sort of, Asian uptake?
Perhaps they're going to broaden their base and also be a bit more selective, but certainly they're strong buyers because they have the capability to do so. And
they've got some more controls in their own countries now, haven't they?
Absolutely.
Do you think that's sort of part of the reason we've seen a bit of a slow?
It could be because they're tightening across a whole range, particularly from legislation and corruption, trying to reduce that. And certainly it's tightened things quite a bit.
Yeah, so they probably see the legitimate market still alive and well, you think? Yeah, it's often the way, isn't it? Yeah.
Yes.
And there's certainly a good place for
and
that.
And certainly it's created that liquidity and price increases, but it's also seen the prices go up. So.
Now let's have a bit of a brag moment, because we've had quite good returns for our clients in the managing of portfolios for 2015, despite what's been a very trying year.
I would say challenging.
Yeah, very challenging.
And it's amazing, you could, had you gone 6 months later, you would have got much better returns. But where this year's been probably difficult, but it's been two-sided, and I think it's when people came in because the resource stocks had a big impact.
So what you're saying is if people came into the second half of the year, they probably, Having said that, some of our clients got some amazing growth in the first half too, didn't they?
And look, we've been very strong with the sectors that have done quite well. And that's certainly given a good boost to the performance. But those resource energy stocks, I think they've they're troubling a lot of people.
Yeah, it's really tricky. So, Nick, just in terms of the year forward, what do you think are the key touch points, or to all of our clients that are watching now that are in our self-managed super funds, that are buying property and investing and have funds under management? What advice would you give them for 2016?
Keep building up the portfolios, keep putting money aside, and look, you'll have down markets, and it's a good probably time to dollar cost average, and keep investing, keep the long-term process going. This is one of those things, and it's, if you go back only 2007, 2008 when we had the GFC, which is now becoming a forgotten memory, people were quite blown away and didn't want to invest, but that perhaps could have been one of the better times to invest. So you just keep doing it, and this is an opportunity in many situations, so just keep investing, keep the plan, keep it going, and things you'll get some awesome returns at the end of the day, but this is a period that we're going through.
Well, what do they say? Tough times don't last, tough people do.
Yeah.
So I certainly think in terms of the solid philosophies alive and well, and that is take a long-term view, be engaged with your finances, lean in. And Nick, we've seen such a dramatic uptake of clients that have been in our program for 2 and 3 years now, really leaning into that sort of bigger picture, haven't we?
Yeah.
And seen some very dynamic results there too. And what's fantastic too is we're seeing the children of our clients now who are adult children, so that's been a great thing for us as well, hasn't it?
Absolutely.
It's good to
Absolutely.
see. Good to see. Just on the property market, I'm just reflecting on the changes that I've been enduring in the last couple of years, and that is that retail property really saw a bit of a drop, but now of course retail property on shopping strips is being seen as potential accommodation above, so that's going through a new rebirth again, isn't it?
Yes, and we were talking about commercial property, and that the shifting of industries and trends have made things quite different. I mean, you're talking about apartments, but that has captured the imagination, whereas 5-10 years ago it was still a new thing, wasn't it?
Well, what I find interesting is that it's the people who were slightly older couldn't think of anything worse than living in a shopping strip. The younger people love it because they just walk downstairs to the convenience store, across the road for coffee and down the road for a glass of wine. So the thing I think has struck me more than anything is when you look at the London market, particularly the 4 and 5 story houses of old that were for the wealthy are now 4 and 5 apartments, and they're being strata titled, and we're seeing a lot of that happen. In fact, Paul and I yesterday went to a place in St Kilda that was a great mansion. It's now 4 apartments, so I think we'll see a lot of that. So there's some areas that the dynamic shift is turning them into apartments, and there's other wealth belts that are turning them from apartments back into grand mansions. So it's really a matter of voting with your purse, really, isn't it?
It is.
Anyway, I'm looking forward to next year.
Yes, 2016, please come on.
So we've moved premises, so we're ready for some further growth. So we've moved premises. In fact, the removers van arrives on Monday, so in the heat, lucky us. But anyway, been a great year.
Likewise.
Thanks very much. And
to our clients, and have a good year, and a happy and prosperous 2016.
Merry Christmas. Thanks for listening.